All right, so it looks like someone's getting ready to make some pretty big decisions based
Yeah.
on all this research you sent over. We're talking comparing companies, products, really anything.
You got it.
Don't sweat it, though. That's what this deep dive is for,
Exactly.
helping you pull out the best, most useful techniques from all these excerpts. We want you to walk away feeling confident, informed, not overwhelmed, ready to compare anything.
That's the goal. And one thing that really stands out from these sources is that they all emphasize this really structured, strategic approach to comparison.
Okay, so it's more than just a checklist.
Way more. I mean, one source even lays out 12 different points to compare from like basic features
Right.
all the way to sustainability and even brand reputation.
Wow. Okay, that's a pretty comprehensive framework.
It is. It really pushes you to think critically, beyond the surface level about what really matters in your decision.
So give me an example.
Okay, so let's say you're trying to choose a new project management tool.
Okay, yeah.
Obviously, you're going to compare features, but what about things like scalability? Can it grow with your needs, right? Or how about the ethical practices of the companies behind them?
Yeah, that's a good point. Something you don't always think about.
Exactly, and that's what these sources really highlight.
Yeah, the more holistic approach.
Definitely.
Now, I noticed you flagged a lot of material on comparing public companies.
Right.
Seems to be a key area of interest.
For sure, and the sources really dive deep into using financial ratios for these types of comparisons.
Ratios, yeah, they can be a little intimidating.
I know, they seem complicated at first, but they're actually super powerful once you understand them.
So break it down for me. What makes ratios so useful?
Well, think of ratios as a way to understand the relationship between different financial figures, not just the numbers in isolation.
Okay.
So like instead of just looking at a company's debt, you look at its debt in relation to, say, its earnings or its assets. This way, you get a much clearer picture of its overall financial health.
It's about seeing the bigger picture,
Exactly.
not getting lost in the individual numbers.
Right.
Okay, so since we're on the topic of public companies, let's dive into some of those key valuation ratios that you were talking about. One that seems to come up a lot is the PE ratio.
Ah, yes, the price to earnings ratio.
Yeah, price to earnings. Break it down for me. What's the simplest way to understand that?
Okay, so imagine you're buying a lemonade stand, right?
Okay.
The PE ratio is basically like figuring out how much you're paying for every dollar of profit that lemonade stand makes.
Okay.
So if a company has a PE of 20, it means you're essentially paying $20 for every dollar of profit the company generates.
So higher PE, you're paying more for those earnings. Does that automatically make it a bad investment?
Not necessarily, no. It really depends. A high PE could actually indicate strong growth potential.
Okay.
Like think about a tech startup with a brand new product that everyone's excited about.
Yeah.
They might have a high PE because investors believe that their earnings are going to skyrocket in the future.
Makes sense.
But on the other hand, a high PE for a company in, let's say, a really mature, slow-growing industry, that could be a red flag.
Okay.
Could mean the company is overvalued.
So it's not as simple as just looking at the number itself?
No, definitely not.
You need to kind of do your homework and see what that number is really telling you.
You got it. And speaking of ratios, another important one, especially when you're comparing companies that have, like, different debt levels, is something called the enterprise value to EBITDA ratio.
Enterprise value to, whoa, okay, that's a mouthful.
It is.
Can we unpack that one a little bit?
Sure. So EBITDA stands for earnings before interest, taxes, depreciation, and amortization.
Okay.
It's a way to look at a company's core operating profitability, how much cash it's generating from its actual operations, regardless of its capital structure, like how much debt it has or its tax situation.
So I'm with you so far. Why is this ratio helpful when we're comparing companies that have, like you said, different debt situations?
Okay, so imagine you're comparing a company that's been around for a while, has a lot of debt, to, let's say, a fast-growing startup that's mostly funded by equity, right?
Right.
The mature company might have a lower net income because it has to make all those interest payments on its debt.
Right.
Even if its core operations are actually really profitable.
Ah, so this ratio helps you kind of see past the debt.
Exactly.
And assess the business itself.
Yeah, you're leveling the playing field.
Got it. It's like comparing apples to apples, even if they're dressed up differently.
Precisely. That's why I love ratios. They provide that standardized way to compare, even if the companies have really different financial structures.
This is making a lot more sense. I feel like I'm actually starting to understand these ratios. Now, these ratios clearly give us valuable insights.
They do.
But I did notice the sources also emphasize that numbers aren't the whole story.
Right.
They talk about the importance of qualitative factors too, like things like market share, competitive advantage. What are your thoughts on that?
I mean, you're absolutely right. The numbers are important. They give you part of the picture. But to really understand a company, you got to look beyond the financials, you know?
Yeah.
That's where understanding market dynamics and a company's strategic position comes in.
Okay.
And market share is a great place to start.
Yeah. Market share. So break that down for me a little bit.
It's not just about how big a company is.
Okay.
It's more about their dominance within their market, and even more importantly, whether that share of the market is growing or shrinking.
So are they gaining ground or losing ground?
Yeah.
So a small company that has a rapidly growing market share could be a better investment
Potentially.
than a giant that's losing market share.
Absolutely. Look at what happened with streaming services, for example. A few years ago, Netflix was the king, right?
Right.
Now you got Disney Plus, HBO Max, all these players coming in, gaining ground rapidly.
Total game changer.
It totally changed the landscape.
So it's about understanding the momentum behind these trends.
Exactly.
Now, what about competitive advantage? You mentioned that briefly. That seems like a big one.
It's huge. This is where you really dig into what makes a company stand out from the crowd, you know? What gives them an edge? A sustainable competitive advantage is something that lets a company outperform its rivals consistently over a long period of time.
What are some examples of a sustainable competitive advantage? What should I be looking for?
Well, think about Apple, right?
Okay.
And their brand loyalty. People will pay more for an iPhone because they believe in the quality, the design, the user experience.
Right.
That's a massive advantage. That's really hard for competitors to copy.
Definitely.
Or you could look at Amazon. Their logistics network is incredible and their scale is massive.
Oh, what do you guys are better?
Right. They can deliver products faster and cheaper than almost anyone else. Those are advantages that are built over time and very, very hard to break down.
So when we're comparing companies, it's not just looking at how they're doing today,
right,
but also thinking about their long-term potential.
Absolutely. You want to know if they have staying power.
Yeah, are they going to be around in 5, 10 years?
Exactly. And understanding those competitive advantages is key to making that assessment. It's about looking beyond just the numbers and grasping what really makes a company unique and successful.
This is really starting to come together. I feel like we're building a much more complete picture of how to compare companies effectively.
That's the goal.
It's not just one thing. It's multiple lenses, you know?
Multifaceted, for sure. We're combining financial analysis with a deeper understanding of the market and those strategic advantages.
Yeah, this is great. I feel like we could dive even deeper into some of these concepts.
Me too.
But for now, why don't we switch gears a bit
and
explore how these comparison principles apply beyond the world of finance.
I like it. Let's do it. Yeah, I think that's a really interesting point about applying these principles beyond finance.
Yeah, it was kind of a light bulb moment where we were like, wait a minute. This isn't just about companies.
Right.
This is about...
It's a fundamental principle of comparison in general.
Right.
Regardless of what you're comparing, the goal is to understand.
Right, to go deeper.
To go deeper, exactly.
Not just stay on that surface level.
Yeah, like imagine you're weighing 2 job offers. Right.
Okay, yeah.
Salary's important, obviously.
Right, of course.
But what about the company culture?
Yeah.
The opportunities for growth, work-life balance.
Right, the stuff that's harder to measure.
Exactly. Those things can make a huge difference in how happy you are long-term.
How do you measure company culture?
That's where things like online reviews come in.
Yeah.
Like talking to people who actually work there or used to work there.
Yeah, getting the inside scoop.
Even just paying attention to, like, the company's public image, what they stand for.
Yeah. Their values.
Exactly. It's about gathering information from different places.
Triangulating and forming your own judgment based on what matters to you.
It's like you're building this personalized scorecard.
Yeah, I love that.
Tailored to your own needs.
Your own priorities.
Your priorities, yeah.
But how do we avoid getting lost in the weeds?
That's a great question.
I know there's so much information out there.
There is. It's overwhelming. But the key is to be really strategic, you know?
Focused.
Focused, yeah. So before you even start, define exactly what it is you're comparing and what your top criteria are.
So it's like a research mission statement.
I love that, yeah.
Okay, so I got my mission statement.
Okay.
What's next?
Then gather information from a variety of sources.
Okay.
Read reviews, compare features, look at data if you have to.
Yeah.
And most importantly, talk to people.
Right.
Get different perspectives. Don't just rely on one or two sources.
Yeah, so that's where industry reports come in.
Yeah.
Expert analysis,
Yeah.
even just talking to people in the know.
Right. Firsthand experience is so valuable.
Yeah, you can't beat it.
You can't. You really can't.
So we're combining data and insights with real-world perspectives.
Absolutely. That's the most holistic approach.
Okay, so I'm taking notes. What else?
Don't be afraid to challenge your assumptions.
Ooh, okay, so you're saying
Yeah.
maybe I've always thought this brand was the best, but when I actually dig in,
Yeah, exactly.
another one might actually be better for me.
You never know until you really compare.
Right. You have to keep an open mind.
Yeah, be open to new information. That's how you make the most informed decision.
It's like we're comparison detectives.
Love that.
We're gathering evidence, right?
Gathering the clues.
Trying to make the best choice.
And the more you do it, the better you get at it.
You hone your skills.
Exactly. You start to notice patterns. You know what to look for. You can really zero in on what matters.
Okay, so I have my research mission statement.
Yeah.
I'm gathering evidence, challenging assumptions. What's next?
Time to organize all those findings.
Right, because it's a lot.
It is. It's a lot to process.
So how do we do that?
Well, some people like comparison charts, where you lay everything out side by side.
I love a good chart.
It's satisfying, right?
It's very visually appealing.
Yeah, or maybe you prefer pros and cons lists.
Yeah.
Or just jot down your key takeaways in a notebook.
Whatever works for you.
Exactly. Find a system that helps you make sense of it all. There's no right or wrong way.
It's about how you learn best.
Exactly. Play to your strengths, right?
Right. So we got the research mission statement, the diverse sources, challenging assumptions, organized information. I'm feeling like a pro, but I'm realizing we can compare so many things this way.
That's the beauty of it. It's not just about making one decision. It's a skill set that you can apply to all areas of your life.
From job offers
to credit cards.
to streaming services even.
Exactly.
It's everywhere once you start thinking this way.
It's like we've unlocked this next level of critical thinking.
We have.
And now we can make choices that actually align with what we want, with our values. That's it. That's the goal.
Instead of just going with whatever seems good on the surface.
Honestly, that's what makes it so empowering, right?
Yeah.
You have the tools. You have the mindset.
Yeah.
You can make decisions that actually work for you.
We've covered so much ground.
We have.
We talked about moving beyond those superficial comparisons, gathering information, challenging assumptions, and now organizing it all effectively.
We have.
And we've even touched on how this goes way beyond business and finance, right?
Yeah, it affects all kinds of life decisions.
But there's one more thing that I think we need to explore when it comes to comparison.
Okay, what's that?
Context.
Context, yes, that's huge.
It's about understanding the bigger picture.
Right. It is. It's about seeing how all the pieces fit together.
Yeah, context. It's like the missing piece of this comparison puzzle we've been working on.
Yeah.
So how do we factor that in? What should we be thinking about?
Well, it's about understanding the bigger picture, right? How everything kind of fits together and influences our choices. Remember those financial ratios we talked about?
Yeah.
Those can be super useful, but they only really make sense within a certain context.
Okay, so give me an example. Like, how does that play out in the real world?
Let's say you're comparing two companies using that price-to-earnings ratio, the PE ratio.
Okay.
One company has a PE of 20, the other one has a PE of 30.
Yep.
Now, just looking at those numbers, you might think, oh, the company with the PE of 20, that's the better deal.
Right. Seems like you're getting more for your money.
Right. But what if that company with the PE of 20 is like a really well-established utility company?
Okay.
Not a lot of growth potential, right?
Right. Yep.
And the one with the PE of 30 is like a super high-growth tech startup.
Ooh. Okay. Yeah, that changes things.
Yeah, suddenly those PE ratios tell a very different story, right?
Totally.
You got to consider the industry, the company's growth stage, even the overall economic climate to really make a fair comparison.
So those ratios, it's like they're individual pieces of a puzzle.
Yeah.
But context is that picture on the box
I like that.
that helps you put everything together.
Perfect analogy. And it's not just about finance either. Like if you're choosing between two products, got to think about your own needs and preferences, right?
What works for you might not work for me.
Exactly. Like a basic smartphone might be perfect for someone, but if you use your phone for work, you might need something way more powerful.
Yeah, way more features, yeah.
It's about making sure you're actually comparing apples to apples.
Okay, so we're thinking about the bigger picture. We're putting those ratios into perspective. What other context clues should we be on the lookout for?
Well, pay attention to trends. See how things are changing over time.
Oh, okay.
A company might be doing great today, but who knows what challenges they might be facing in the future.
Yeah.
Or a product that seems cutting edge right now, in a year, it could be totally obsolete.
So it's not just about the now.
Right.
It's about where things are headed.
Exactly. Got to think about the trajectory, how things might evolve.
Okay, so trends, trajectory. What about external factors like things happening in the world around us? How do those play into context?
Oh, those are huge. Things like the economy, politics, even just social trends. Those can all have a big impact on our decisions.
Right, like if you're trying to decide whether to buy or rent a home,
Mm-hmm.
interest rates are going to matter.
Definitely.
Housing market predictions, even things like the schools in the area.
All of that comes into play.
It's all connected.
Right. It's about being aware of those forces that are at play and factoring them in. You want to make informed choices, not just react to what's right in front of you.
This is mind-blowing.
Uh-huh.
We've talked about so much, understanding different ways to compare, gather in evidence, challenging our assumptions, and now factoring in context.
Oh, it's a lot.
It feels like a whole new way to approach decision-making.
It is. And the most important thing to remember is that comparison isn't really about finding the absolute best option. There might not be one. It's about finding what's best for you.
Right, for your situation.
Your situation, your goals, what you value.
For your own personal context.
Yeah, exactly. It's about making choices that you feel good about, not just settling for what seems okay on the surface.
Right, because what works for one person might be a disaster for someone else.
Exactly. And that's why this is so powerful, right? When you have the right tools, the right mindset, comparison becomes this amazing way to create a life that actually reflects what you care about.
Wow, I feel so much more equipped to tackle those big decisions now.
That's great to hear.
Thanks for taking this deep dive with us. We've covered so much, but I know there's always more to learn.
There is, always.
So what's your advice for our listeners? What should they take away from this?
Keep exploring, keep asking questions, and keep practicing those comparison skills.
Yeah.
The more you do it, the more confident you'll become in making those decisions.
You become a pro.
Exactly.
Making choices that truly work for you.
That's the goal.
And, if you're ever faced with a really tough decision, just remember what we talked about today. Break it down, gather your evidence, consider the context,
Right.
and trust your gut.
You got this.
You got this.